Ladies and gentlemen, good day and welcome to the Q2 and H1 FY26 earnings conference call of Khadim India Limited, hosted by MUFG in time. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Omkar Bagwe from MUFG in time. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and welcome to the Q2 and H1 FY26 earnings conference call of Khadim India Limited. Today, to discuss the results, we have with us from the management Mr. Ritik Roy Burman, the Managing Director, and Mr. Indrajit Chaudhary, the Group CFO. They will take you through the results and business performance, after which we can begin the question and answer session. Before we begin the conference, I would like to mention that this conference contains certain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. The actual results may differ materially. These statements are not guarantee of the future performance of the company and involve risks and uncertainties that are difficult to predict. I now hand the conference over to the management.
Thank you. Hi, good evening, everyone. On behalf of Khadim India Limited, I am pleased to welcome you all to today's conference call, where we will be discussing our Q2 and H1 FY26 results. We sincerely appreciate your time and continued interest in the company's performance, and we hope you have reviewed the financial results and investor presentation available on the stock exchanges. The second quarter of FY26 witnessed a continuation of mixed demand trends across markets. While consumer sentiment remained cautious in certain regions due to persistent inflationary pressures, early signs of recovery were visible in urban and semi-urban areas, aided by improving footfalls. Despite these dynamics, we continued to execute our strategic priorities with discipline, focusing on product innovation, brand building, and strengthening our retail network. During the quarter, the company also implemented GST successfully across its network, ensuring a smooth transition with the benefits effectively passed on to the consumer. Our partnership with Skechers, announced earlier, is progressing well. The initial phase of integration has been encouraging, with strong consumer response across the select pilot stores. The association is expanding our reach into the premium and lifestyle footwear segment, complementing our existing portfolio. The athleisure range launched in the previous quarter has also gained healthy traction, supported by the growing consumer preference for style. We are now scaling up the product line and expanding its availability across key stores. And both our sub-brands, British Walkers and Sharon, continued their steady performance during the quarter. British Walkers maintained its growth momentum in the men's formal and semi-formal segments, while Sharon continued to build strong connect with women customers through its refreshed product range and sharper in-store presentations. We are also seeing encouraging results from localized marketing initiatives and improved visual merchandising in our stores. As we approach the festive season, which started early this year, our focus remains on maximizing the opportunity through enhanced product availability, marketing activations, and franchisee engagement. We have strengthened retail preparedness by optimizing inventory and refreshing store layouts to further elevate the consumer experience. Now let me take you through the financial performance for the quarter and the half year ended 30th September 2025. For Q2 FY26, revenue from operations stood at rupees 1016 million. Gross profit was rupees 478.7 million, translating to a gross margin of 47.1%. EBITDA came in at 137.9 million, reflecting an EBITDA margin of 13.6%, while profit after tax stood at 16.8 million, with a PAT margin of 1.7%. For H1 FY26, revenue from operations stood at 1973 million with a gross profit of rupees 935 million and a gross margin of 47.4%. EBITDA for the first half was 261.2 million, delivering an EBITDA margin of 13.2%, and profit after tax stood at 25.4 million, resulting in a PAT margin of 1.3%. At the end of the quarter, our retail footprint stood at 890 stores, comprising 210 company-owned outlets and 683 franchise-operated outlets. Sales through e-commerce channels are doing decently, and we remain confident in our strategy of building a balanced and scalable retail network while deepening brand relevance across consumer segments. Our focus continues to be on driving profitable growth through product innovation, disciplined cost management, and sharper execution across channels. With this, I conclude my remarks and would be happy to take any questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. The first question comes from the line of Arnav Sakuja from Ambit Capital. Please go ahead.
Hi. Thank you for taking my question. So, is there any update on the listing of our distribution subsidiary, KSR Footwear Limited?
It is very near to listing. Maybe early next week it will be listed. We are very close to the listing thing.
Okay, so you said by early next week it will be listed?
Yes.
Okay, sure. And just coming to my next question, so we connected some channel checks which indicated that the discounts that were being offered in Q1 fell in Q2, but yet in our numbers, we haven't seen the gross margins improve quarter on quarter. So now that the GST cut has been implemented, can we expect some gross margin improvement in the second half?
Yes, because the GST was implemented in the last 9-10 days of this quarter. So this quarter will have the full quarter of the GST thing. Yes, we expect a margin improvement from the first and second quarter in third quarter. Hello.
And any other specific reason as to why the gross margins didn't improve quarter on quarter?
Mainly we have given discount in July, August also. In September, we have pulled out the discount in the eastern region, but in other region, the discount continued because of the low muted demand. So that's why the margin remains same, but in the third quarter, it will definitely improve.
And since the GST cut has been implemented, are we seeing better footfalls in the stores?
Till now, during the Puja time, there was footfall, but after Puja, in the eastern part of the country, we have not seen the better footfall in the Diwali times and all here. But however, during this month is a season of marriage, we expect the footfall to grow in this month from 15th November to 15th December. And after that, there is a winter season coming up, and there also we expect a good footfall. And also the prices has been reduced. We have already, from the last year, we have started this price reduction. In GST also, we have reduced the prices. So now the price reduction is more or less complete. Now we expect that the footfall will rise in the lower category market. We have seen that, as Ritik has told, premium brand is growing both in British Walker and Sharon, but the impact is coming in the mid segment. But with the GST cut down, we expect that there will be a growth in this region also.
Okay. Thank you for answering my questions.
Thank you.
Thank you. Participants, if you wish to ask your questions, you may press star and one. The next question comes from the line of Deepan Sankara Narayanan from Trustline Holdings. Please go ahead.
Good evening, everyone, and thanks a lot for the opportunity. So firstly, the price cuts happened at mother brand Khadim is also one of the key reasons for drop in gross margins year on year.
Yes, there was a drop in the prices of Khadim mother brand, so that has reduced the prices. But with this GST improvement, we expect that it will be better in the third quarter.
Okay. And how has been the performance of Coco and franchisee stores for Q2?
Q2, the more or less the sale, if you see if compared to last year, the sale has come down in both in Coco and in franchisee. So that last year for second quarter we have done around 109 crores compared to 101 crore this year. So there is a challenge. There was also store closure during this last year. Around 30 Coco, the loss-making Cocos has been closed. So that has also impacted the lower sales in this quarter. But if you compare the Puja to Puja, we are almost at par with our last year Puja sale.
Yeah, Puja to Puja, we are almost at par in spite. There was on the week when the Puja, week before the Puja, for 2-3 days, there was almost like a flood-like situation also in our city, in Calcutta. So water and all had little bit entered our shops also, some of the shops, not all. So there was a scene like that also this time while Puja. But due to our expansion and our product innovation and everything, if we compare Puja to Puja, our sales have been almost similar up to last year.
Okay. And so what happened for this KSR listing? Now I heard that it's coming next week, but what has been the key reason for such a long delay? Right, so we have not seen any of the companies reporting such a delay in demerger. So any specific reason why this kind of delay has happened?
Firstly, there was a delay in the last year. Concall, I have already told that there was a shift of this authorized capital from Khadim India to KSR. So that took time from the ROC and also from the Ministry of Corporate Affairs. So that took some around 2 to 3 months time for that transfer. Otherwise, there was an expenditure in relation to the increase of authorized capital in KSR. And after that, then it took time from the NSE and BSE coming up with some queries. So hope all the queries has been met, and we have also published in the newspaper. The early next week, we will be able to get the listing done in both the stock exchanges.
Okay. Thanks a lot and all this.
Thank you. Participants, if you wish to ask your questions, you may press star and one. The next question comes from the line of Devanshu Bansal from MK Global. Please go ahead.
Yes, sir. Hi. Sir, from a macro perspective, government has sort of reduced GST significantly, at least for our category for footwear, which is under 2500, has been moved to 5%. So, over a medium term, how do you see this step? As in, was this price, because in earlier calls you have always mentioned that there is a lot of stress on the consumer and prices, etc. But now with all this GST reduction, how do you see the consumer demand evolving? We have reported almost 7-8% revenue decline in H1. How do you see maybe things for H2 and then going beyond FY26? So Just from this metric itself, from GST perspective, how should industry trends sort of evolve?
See, this is a very welcome move from the government, because in this segment there was a lot of pressure due to GST on the pricing. It is a welcome move, and we expect that this will enhance both our retail business and also in our distribution business, because previously when the GST was implemented, the rate was 5% for around 3 to 4 years. And that time there was no problem in the demand in relation to the product in the lower segment. But after this GST implementation, after the COVID, we have seen that after this 12%, the demand in this 1,000 category has declined for not only us, but for the entire industry. So hopefully after this GST cut down and with the increase up to 2,500, we have also passed on the benefit, and also we have reduced the prices. We'll definitely see some growth, because this will give a lot of price competitiveness in the retail industry, and we hope that demand comes back and the volume takes up. So that is the challenge. This is the wedding season is coming soon, and we'll definitely see some growth in this segment.
So two follow-ups. One, you mentioned that when GST was 5%, you mentioned that growth was pretty impressive. So if you could just highlight what were the growth trends that we were seeing in that period of time. And secondly, from a price competitiveness, you indicated that things have improved. So are you talking about your price comparison with, say, players who were not paying GST and they were sort of benefiting from that? So as in, do you expect that there will be accelerated shift from unorganized towards players like us? So if you could just throw some light there.
Yes, during 2017 to 2000, before COVID, there was a growth in the retail industry of 7 to 8%. We have already seen in those years. After that, COVID came in, and then into January 2022, the GST rate was increased, and from there, the demand in the lower segment has gone down. Definitely, with the GST coming to 5% and till 2,500, we expect that there will be demand coming back, because in lot of sector the demand was muted. So hopefully, once this quarter pass, we will have a clear picture on the demand thing. And also in regard to we have also from the last year, we are trying to reduce the prices to make our product competitive in the market. Yes, now since the GST is 5%, so there will be definitely the bridge between the unorganized and organized will be lowered, and we can see better demand in both in retail market and also in the distribution market.
Fair enough, sir. And secondly, on the balance sheet side, I wanted to understand. So as of September 25, I see that overall inventory plus receivable combined is about 340 odd crores for us, right? And from a sales perspective, when we see broadly, I guess on a annualized run rate of H1 FY26, it's about 400 odd crore. So this is a fairly long inventory and receivable cycle that we have, right? So
yes.
Why is it so high? Because this is not the case with other retailers. And secondly, what are the steps that we're taking to sort of optimize this? So, yeah.
See, in the data, we have also our institutional data of around 32 to 35 crores. So which is there is no sale of institutional because we have stopped sale. So that data is included here, which is not a part of the sale compared to you. And also definitely the stock level and data level is high, because as you have seen in the first 2 quarters, we have reduced the stock by giving discount and flushing out the obsolete stock. Now the stock level has come down. Yes, the data level is high. We are also trying to reduce the data, because their sale is also, the demand is also secondary sale in the franchise is also less. So they are unable to make the payment within the time frame and within the days. definitely there also we are taking control so that we can reduce the debtors. So this year, so the working capital cycle is high. We are taking measures to reduce the working capital cycle to the extent possible. Already in stock we have done. Now we are taking serious steps in the debtors also.
The stock, etc., you said that you have given discounts and all, right? So primary billing can happen, but if the secondary growth is not happening, then franchises will not make fresh purchases. So I wanted to check as in what is the growth difference between primary and secondary? Obviously, you have liquidated the stock, but that stock...
No, we have liquidated the stock. We have liquidated the stock in our own cocoa, and also forced the franchisee to give discount so that their stocks are also liquidated. And we are now, depending on their secondary sale, we are making the primary sales. For that reason also, you can see that the sales for in the primary has come down from the last year. So we are also taking into consideration their stock also, so that their stocks are liquidated, they can repay us. So the
ideal, what is the level that you would ideally desire it to be, right? In terms of days, how much inventory should be there, how much receivable days should be there for your business?
See, in case of retail, around 90 days stock days should be there. And in case of franchisee, they should also have a 90 to 120 days, because from ours to theirs takes some time of 15 to 20 days of reaching to their depot or their...
So, and in terms of credit period, as in to your vendors, typically how much leeway do you get?
Around 90 days.
From your vendors also? You get 90 days of credit period?
Yes. 60 to 90 days.
This is on COGS or sales?
Huh?
This is on COGS or sales, you're saying?
This is on sales. No, this is on sales.
So you're saying your inventory, your working capital cycle is ideally zero then?
No, we have stock and debtors also. No?
So you're saying, okay, so you're saying 90 days on overall revenue, not on cocoa revenue.
No.
Overall revenue, you're saying inventory should be 90 days.
It is 90 days stock, 90 days debtors and 90 days creditors. So overall my working capital cycle is 90 days. Okay.
And so lastly, because 7-8% growth what's your sense? Isn't it very conservative? Because the prices itself have reduced by 7-8%, and if you are growing at 7-8%, then this pricing reduction should actually add on to the underlying growth trend, right? So the 7-8 seems to be very low if you're sort of indicating for say...
See, for the last 3.5 years, we are landing up in negative growth. So now taking up growth of 15% is, I think, it is not possible. But however, if this is the retail industry, if the customer comes, if the sales happen, then it will happen. We are estimating that whatever growth we were used to do when the GST was 5%, that I have told you.
Okay. And sir, any comments on competitive landscape in the area of operations that you operate? Is it, can you give us some confidence around market share protection, or maybe whatever insights you have? Because obviously 2-3 years of decline, obviously the industry must not have seen such kind of a decline, right? So any comments there?
Yeah, I'm coming in on that. So basically, we have been taking a lot of steps from before also. So past many years we were seeing volume degrowth and such sort of problems. So then first we took a price cut in our mother brand Khadim's. So what happened after that is we saw a good amount of market share regainment in the below 500 price range of products. We saw a decent amount of growth in that. I would say double digit growth below 500 products. Okay, and then comes the premium, the question of premium products, which I mentioned in my opening comments also. Both British Walker and Sharon, these two brands, they are also doing very well. British Walker is growing in double digits and our Sharon, which is a premium ladies open footwear brand, that is also growing in double-digit ranges. We have tied up with Skechers also. So, whatever steps we had taken, we are seeing growth in that. But yes, what Indrajit was saying, that, the mid price point from, say, 500 to 1,000, 1,500, there the products, the demand of products has been a little, you can't really put a number. It's not we want it to be. So now that the GST has reduced, many of these products like 500 to 1,000, yeah, 1,000 to 1,500, because the GST has reduced, to be able to give lot of different types of products which previously used to be at a higher MRP.
Understood.
Consumers used to find it very expensive. So now we expect that once we start giving products in this range, 500 to 1,500, we will be able to arrest the big degrowths that is happening in this price point. I already told you 0 to 499, we took action. We have seen growth. Above this British Walker and Sharon, we have seen growth. Then in British Walker brand, if I talk, we have launched very good shoes at 3,000 and above. The pricing is 3,000 and above. It goes up to 5,000. It's various type of shoes. Wide fit shoes are there. Then there are shoes with crushed leather shoes, which have a very premium antique, so not antique, like it has got a premium classy look which you can wear at a party or a wedding. So there are lots of collections like this which we never used to have before. This crushed leather collection or the wide fit range which we used to have in British Walker always, but we have increased the lines, and we aim to increase more designs in this British Walker. Also in Sharon also, we used to operate with a certain number of lines, 50, 60 lines. Sharon has got like the California construction comfort in it. Then the lightweight EVA soles are there. So here we would like to increase the number from 50, 60 to a higher number. So, we hope that, we are hopeful that these things are done, we should get a decent growth. So that's what.
Yeah. Sir, I wanted to ask a couple of follow-ups here. One, as you mentioned that less than 500 and above 1,500 are still giving you double-digit growth, and the major pain point is 500 to 1,500, right? So firstly, if you could provide revenue mix for all these three price segments for you as of now. This is number one. And secondly, at 500 to 1,500, which is the peer that is doing very well in your area of operation. So if you could just help me better understand, that would help me better understand the market.
I think this will provide you, give a mail to us, we will provide you these details. Okay.
Okay. And on the peers, sir, and which players are doing well in this 500 to 1,500 brackets?
See, peers we cannot comment, but all I can say is that with the GST cut and with our own product innovation from 500 to 1,500, which is ongoing right now, I think we would be pretty much competitive. And we would be providing a lot of value to consumers, and they should buy from us. Because for a very long time, we were not there in the below 500 range, and we have given and we have seen certain effects of that. So similar effects should be able to be seen from 500 to 1,500 as well. Because we are doing a lot of product engineering and product innovation in it. So we should be able to see some improvement in that as well.
And sir, over a medium term,
Mr. Devanshu,
last question.
Mr. Devanshu, please rejoin the queue.
Okay.
You may ask a follow-up later on. Thank you.
Yeah.
The next question comes from the line of Nachiket Kale, an individual investor. Please go ahead.
Yes, hi. Thanks for the opportunity. Ritik, you were just mentioning about the British workers. I believe I saw the new range of products, and of course, they have a very premium look and feel, and pricing has also been on the higher side. So, as the way I see it, our ASP is usually around 800, 900, and we have launched these products in the 4,000 to 6,000 price range, which I must say they look really good. So what's the strategy on this premium product line going forward? Because British workers definitely is driving the premiumization. So where do we see this brand going forward, say, over the medium term?
Yeah. So, thanks, Nachiket. We are really hopeful with our British Walker brand, and we have seen double-digit volume growth in British Walkers if we compare against last year, this brand. And British Walker is a brand where you get shoes starting from 2000 to it goes up to even 6,000, 7,000 rupees now. So previously we were more populated in 2000 to say 4,000 range. Not even 4,000. You can say 2,000 to 2,999 range. Okay. Then what happened is since this year we have started launching very premium shoes at 2,999 and above. So we have shoes at 2,999, we have shoes at 3,599, we have shoes at 3,799, we have certain shoes at 4,999, and we have launched certain products at 6,999, 5,499. So these are all these products are very appealing, if I can say appealing. So the hand-casted leather shoes which I am talking about, they are very appealing. You would want to wear it for any wedding or a party season, and we are seeing a good traction. We personally track it on a daily basis. How many pairs of that is getting sold in this casted leather shoes? Then the white fit ranges which you had seen, which starts from 2,999, goes up till 5,499, 6,999. They also are seeing a lot of likability by the customers, and that there also we are seeing a good growth, and we are quite confident that this trend will continue, and we will continue to launch newer designs in this British Walker category. We want to build this brand by creating zones within our stores itself, so that it gets a separate sort of a highlight. We are already doing a lot of visual merchandising and stuff for it, but we want to separate zones where this British Walker could be highlighted even further. Okay. So we believe that if this brand being so expensive also, they are growing at double digit, we want to keep this endeavor alive, and we have a lot of hopes for it in the medium term and also the long term as well. And same is the story with, we have another brand called Sharon in ladies, where also we operate from the price point of 1,000 to 1,499, but now we want to launch more products in 1,499 to 2,000 as well, with premium soles, premium comfort. That should also give us a good growth, as this brand is also growing in double digit.
Okay. Yeah, especially the wide fit range in British Walkers. Level of comfort they give at that price range is unmatched in majority of the superior brands also. So this really looking forward to see these products more in the western and southern markets as well. So I have one more question, more to do with the balance sheet side. How do we anticipate inventory levels and debt in the second half of the FY26?
The inventory level will also, we are trying to reduce our inventory to the extent possible. Already we have reduced the inventory compared to the March.
Yeah, there's an encouraging trend there.
So by March 26, we will be furthermore reduction in inventory will be done. we are very much taking care in our outsourcing thing so that then there is no overbuy, and also we are taking care of this inventory so that the right inventory is there in the right place, but there is no overburden of inventory, so that our this discount sales comes down in the next year.
Correct.
Yeah, we are
And
pretty
on the
much
debt side?
Yes,
debt.
debt is around 120 crores.
So we will close the year at a similar level, or
No,
we'll see further
we'll close with nearly less than 115, like last year.
Okay. Understood. Okay, great. Really appreciate the new initiatives. All the best. Looking forward to the listing of the subsidiaries.
Thank you.
Thank you. Participants wishing to ask more questions, you may press star and one. The next question comes from the line of Dheeraj Shah from RJ Financial Services. Please go ahead.
Hello, am I audible?
Yes.
Yes, sir, you are.
Yeah. So I just have two questions. Firstly, the e-commerce contributed roughly 1.3% in the Q1. So what was the e-commerce contribution in the second quarter and expected channel mix over the next 12 months? And perhaps any tie-ups or marketplace initiatives that you might have planned?
In the second quarter, it has improved. It is around 4%. And what was your next question?
We have done one tie. We have not done a tie-up, but we have started working with one agency which has a good knowledge about this e-commerce operations. So we hope that after tying up with this agency, we will be able to run our e-commerce operation more smoothly.
Okay. All right.
Well, this agency is specialist in doing e-commerce for different brands. Okay. They do the e-commerce activity for different brands. So we thought that such a partner would help us to grow our e-commerce business. So we have just taken them, and we should see the fruits of it soon.
Okay, understood. And secondly, a retail store count rose to somewhat 893 stores. I think it's up by 37 stores in H1. So what is the planned store addition for the second half? And a split between company-owned and franchisee models, if you could throw some light on that.
No, we were in terms of Coco, we'll open less Coco. We are now opening more or less TFM and FRM sort of franchisee operated, but we have our own stock. And also we are trying to open EBOs also. But we are taking strict decision in regard to closure of Coco if it is non-performing. If it's a loss Coco, we are taking the steps to close it down.
Okay, understood. That's all from my side. Thank you for taking my question. All the best for the future quarters.
Thank you. Participants, you wish to ask questions, you may press star and one. The next question comes from the line of Ankit Shah, an individual investor. Please go ahead.
Hello.
Yeah, can you hear me?
Yes.
Yeah. So I wanted to understand that since in the new GST regime already 2 weeks have sort of passed. So what has been the trend so far in terms of your Coco sales? Because that's where you get the secondary and tertiary data immediately. So just want to understand that part. Was the same period last year? Sorry.
But we have seen more or less same level of sales in the month of October, but during this wedding season, we are expecting that there should be a growth compared to last year.
Okay. So post the Durga Puja and post the new GST rates, last 45 days, you're saying that sales have been more or less similar versus last year.
Yes.
Yeah, we have shut a lot of shops also. That's also one
Because of that
thing.
flood.
Because of that also, if we have shut loss-making stores, many, so because of that, maybe the sales are same, not growing. But if we hadn't shut the loss-making stores, some growth might have been there. But again, we have taken a very conscious call that deep loss-making stores we will not keep. Instead, we are focusing on a lot on an expansion through franchisee and TFM, where if you in TFM we are seeing a good growth also in the sales. It's taking some time to make up for the lost sales of the shut stores, but there's a lot of focus from the company side to do the expansions so that we can make up for the lost sales and grow also.
And in terms of margin, like say, I think last quarter we did more like 47-48% overall on retail. So from this quarter onwards, what is the trend that you are looking at from a gross margin? Because also a lot of your old inventory you have sort of discounted in the earlier quarters. So now I'm assuming that both with the GST plus the new inventory, what would be the gross margins?
It will be higher compared to the last 2 quarters, but exactly means the percentage we cannot tell.
Like will it go back to 53-55%, which is what you were at least?
Because already we have reduced prices. Means after the GST implement, we were reducing from last year, and also during the GST thing, we have also reduced our MRP. So taken together, maybe we are reaching at 50, 51. Not more than that.
In the third quarter, you're saying?
Third quarter and fourth quarter.
See, if you aim for too much of what I am trying to say is that the volume growths are also there, okay, in the lower price points. We need to take that also into consideration. Then there is previous for so many years we were degrowing in volume at a large amount. But now, in spite of closing so many stores, our degrowth and all we are almost like to like in Puja, okay, even after shutting so many shops. So that way, if you say gross margin definitely will increase to 50%, 52%, but then for a while our brand had a problem of volume growth. So we have sort of arrested that because of this gross margin.
That was also an industry level problem, I think.
Yeah.
Because even Bata has been facing similar issues. Some of the other distribution players are also facing volume growth issues. But I'm saying like with GST, what will happen is the same product which was earlier available at say 1,000 rupees is now available for 850, 880 rupees. So of course your elasticity of demand is there. So your volume growth should come directly because of just the GST cut itself. Even if you don't reduce the prices further, the volume growth should.
See, value-wise, gross margin will increase, but percentage-wise, gross margin, I don't think will go back to 53, 54 right now. But obviously, it will be better than the second quarter and first quarter.
And on the distribution business, since it's getting listed next week, so what are the numbers? Because, of course, in the last 2 quarters, we have not seen what the distribution business has done.
The distribution business, where we have taken some strict calls regarding to working capital on and we are really able to do good in that sense. Distribution business has clocked a turnover of around 100 crores. So this year, we are expecting from the next financial year, the distribution business will also be a profitable business.
No, you're saying 100 crores is what we've done in the first 2 quarters. Okay. So you've gone back to
in spite of all the restrictions that we have imposed and all the cost curtailment that we have done in distribution.
Which was what your run rate was 2 years, 1.5, 2 years back. You were doing 200 crores.
Around 220, 230.
So you've gone, what you're saying is despite all the, inventory, debtors, policies that you had changed, despite that, and you have made it more strict, so despite that, the growth has happened. versus last year?
No, last year and this year more or less same.
Same. Okay. But then you will be at least break even this year, or no? Or you...
Sir, we'll trying to make a break even. Let's see.
Okay. Got it. Yeah, that's it from my side. Thanks.
Thank you. In the interest of time, this was the last question for today's conference call. I now hand the conference over to Mr. Omkar Bagwe from MEFG in time for closing comments.
Hello.
Over to you, sir.
Yeah, thank you for joining us on the call today. I would like to thank the management for sparing the time and answering all the queries. We are MUFG in time, Investor Relation Advisors for Khadim India Limited. For any queries, please feel free to contact us. Thank you everyone and have a great day.
Thank you.
Thank you.
On behalf of Khadim India Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.